I'm having lunch with a prolific entrepreneur, investor, and fund manager who has successfully capitalized on some of the biggest trends in Asia. Today, he thinks he's on the cusp of a new trend with billions in potential market value. I've traded global financial markets and advised some of Asia's wealthiest for more than 20 years. Yet, I'm constantly in search of new perspectives on finance, business, and of course, life. So I booked tables and put wine on my tab just to bring you some food for thought. If I had to name someone a man of the times, it would be Jayesh. He has made his career by spotting and successfully riding some of the biggest waves of Asian change, not once, but 3 times. From bringing IBM back into India in the late 80s before its IT boom, co-founding Sony Entertainment Television in the 90s before the rise of India's middle class, to being one of the early pioneers of Southeast Asia's venture capital industry in 2012. Can you maybe share with us how you look at these opportunities?
When I looked at that opportunity, I looked at the long-term growth of that opportunity. So let's go back to IBM. I was doing extremely well in Houston, Texas, mainstream IBM job. And when they said, hey, can you go and start India as a country? And everybody said, you really can't get out of the mainstream IBM because when you move out, it's out of sight, out of mind. But I looked at it differently. IBM was the #1 IT provider back then. And therefore, if IBM successfully moved back to India, that will be a huge growth for India. So I got IBM started there along with some 3 other teams. We went and encouraged many of these big corporates to say, hey, take a look at this IT and the software industry. And actually, it turned out that the software industry started in front of us.
With India's economic liberalization beginning in the mid-80s, IBM was part of the early wave of multinationals making their re-entry. The IT BPM industry has grown exponentially from providing cost-effective back-office support to a global powerhouse, accounting for almost 20% of global IT spend in 2021.
That was the first one, which I said, hey, there is a purpose behind it. Purpose is, can I influence something like this, which can have a huge impact? So in a way, I look at myself as a catalyst. All of these things that I've done, I'm actually just a catalyst. Second one, when I got this opportunity and I got asked by a friend saying, hey, would you like to help us start a television channel in India? Back then, there was the local Doordarshan, which was the television black and white back then. And there was only one cable and satellite channel called ZTV. And I looked at it and I said, oh my God, wouldn't that be great if we can bring entertainment, which is of world quality, into India? And fortunately, then Sony Pictures Entertainment agreed to do a joint venture with us. And we started a phenomenal network called Sony Entertainment Television.
That was actually quite an interesting switch for you, right? From IBM, from being a software engineer to television. So how do you make that mindset shift again?
A, I saw the purpose. 2, I saw the opportunity. I thought this was phenomenal opportunity in terms of the growth, the economics, right? The biggest trend was India was a country of have and have not. So the rich were really, really rich, mega rich, and the poor was really poor all the way down to degenerative poverty. But 80s and 90s really was the middle class. The middle class suddenly came into being. And middle class in India is bigger than a population of countries, right? So I mean, like there are 200 million middle class people. Companies, especially FMCG, they had a lot of money to spend. And what I saw is that the television industry was very nascent. The per capita ad spend was almost negligible in India back then. Therefore, the growth of a company like that can be, back then we thought hundreds of millions of dollars. We were naive. We didn't even realize that this can be in billions of dollars.
Jayesh spent 1995 to 2013 building Sony Entertainment Television. During this period, the number of licensed TV channels in India grew from 1 to over 800, mirroring the rise of India's middle class. In 2012, Jayesh famously helped start Singapore's Jungle Ventures, one of Southeast Asia's pioneering and largest venture capital firms. So once again, I think the timing was immaculate, right? You and your friends get together, form Jungle, and you really caught that wave, the whole growth of the venture capital industry in Asia.
So when the government decided about 10 years ago that they wanted to promote entrepreneurship in Singapore, I felt that was fantastic. I was already an investor in VC funds and startups in Silicon Valley. And there was no reason why Silicon Valley would be the only place where entrepreneurship and venture capital fund would survive and thrive. Israel was just starting to get into that same mode. And therefore, China and India were the next. And I so again felt that purpose in me that said, okay, I have become an entrepreneur myself, and why not I promote that entrepreneurship? So that's how the Jungle Ventures story started as well.
You seem to be on pulse of all the mega trends. So what is this instinct, right, for you to know this is a big trend?
You don't know the end result when you get started. I think it develops over time. However, the big picture 360-degree view gives you an insight. How do you track trends? One is cash flow, second is user flow, and third is data flow. So cash flow means you really see that this thing is going to have huge cash flows and revenues and therefore economic value. But there are things like WhatsApp and Hotmail, which is user flow. The number of users are so dramatic and so huge. And if you capture that user flow, then you can become a very successful and large business. And the third is data. Whoever has the data flow, so people like Akamai and all of these guys, if you're capturing a portion of that data flow, then you can become a successful enterprise. So that's where you start seeing the worldview. Impact investing was another S-curve that I saw.
Riding on the mega trend of sustainability, Jayesh partnered with an old friend from Silicon Valley, Gautam Gotwani, to start a venture capital firm focused on the alternate protein space. They are on a mission to remove animals from the food chain.
When Gautam talked about this alternative protein space and venture capital, what intrigued me is the intersection of technology, economics, but also impact. So just by itself, the previous life was economics and technology. And one life was just impact and economics. But now I've got all three. So all my previous career moves and professional moves and entrepreneurial moves all come together in this, which I hope is my final swan song. Today, if you look at climate and factory farming, it's a big deal. Meat is about $1 to $2 trillion industry called protein. Currently, it is only 1%.
Barclays forecasts alternative meat will capture 10% of the global meat industry by 2029, suggesting a global market size of $140 billion.
The usage pattern today of this particular alt protein is dramatic. 14% of dairy is alt dairy in United States. 75 to 80% of millennials have tried alt protein, and about 35 to 40% of them consume it on a daily or a weekly basis. These are the trends, right, which give me a lot of comfort to tell me that, yes, I think this is here to stay.
I'm having lunch with the managing partner of alt protein VC firm, Good Startup. Jayesh thinks the best way to introduce me to this burgeoning industry is to eat it.
Welcome.
Hi.
Welcome to Green Common.
Green Common is the world's first plant-based eatery and grocery concept store, featuring food 2.0 from all over the world.
One of our more popular dishes is the Omni Musubi.
Sold.
The Gen Zs gravitate towards that. The other thing that I would like to bring your attention to is our seafood range. We have 4 fishless fish dishes here. As you know, and there's no better way to save our oceans than to not eat it.
Thank you so much.
Equally social conscious, Jayesh and his partner launched a $30 million impact fund to invest in 32 startups, from food and materials manufacturers, ingredients companies, to process technology companies.
This is very early days for the all-protein investment ecosystem. And if you remember the mid-90s, internet was in the same position. There was a mismatch between opportunities and capital. And today we're in that same place. With all-protein, you have a few thousand companies. There are a few venture capital funds, there are a few family offices, and a few angel investors. But the opportunity is massive. But as the middle class becomes aspirational and wants to introduce more and more meat on the table, there isn't enough arable land and water to continue to grow the meat protein in its current form. So we invest in all protein startups, right? These are companies anywhere in the world, and we'll invest in any of the three types of technology. One is plant-based meat. One is cultivated meat, which is called cell-based meat. And then the third is fermentation. And also we invest in materials.
Oh, here comes the food.
Yep. This is our famous omi mushubi using our omi luncheon. And this is our papaya mango salad. So we are using unlimited product from Korea.
I like this name, Unlimit.
Supposed to be like beef, right? With the right texture and the muscle strains.
In Asia, vegetarian, vegan, mock meat has been around for a long time.
It's gluten, right?
But
It's gluten-based, yeah.
So this change is really dramatic.
Yes, very dramatic. I think you know gluten, right? The texture is a bit more dense.
Correct.
It doesn't have this kind of mouthfeel.
This is plant-based meat, but plant-based may not be disruptive after 5 years. And at some point, you're going to start having cultured meat, which is called cell-based meat.
Yes.
And that cell-based meat is going to have the same molecules as what the normal meat has. And so you won't be able to tell the difference. There are a few products that are coming out in the market right now, but it's very early days.
But cell-based meat sounds really out there, right? In the sense that we are cultivating cells and kind of growing it in the lab, essentially. How safe is it, right? And I think there's a lot of debate around governments and how they would like to regulate cell-based meat.
So when you compare the cell-based and the, how safe is it, you really must compare it to what is out there today. How clean is the meat today? If you say factory farm meat, there is 80% antibiotics in the world are used on animals. There are some companies which have 37 ingredients on it. Some of those names you can't even pronounce. Is cell-based meat. You haven't slaughtered an animal. You've taken a cell line and you're growing it in the lab. You're feeding it growth and medium, and you're scaffolding it. And therefore, there's no wastage. There's no harm to animals. But also, it does not have the antibiotics and the contaminants. So while you're right that we should all worry about the processing,
Yes.
but that's where the regulators all over the world come in to certify some of these products, right?
Even though Singapore is the first country in the world to approve cell-based meat for consumption, the global regulatory landscape is more uncertain. This doesn't stop investors from positioning themselves at the forefront of the sector.
Isn't it excellent?
Excellent, yeah. 2020 saw a record of $3.1 billion invested in all three types of alt protein technologies, with Asia Pacific receiving a more than six-fold increase. China consumes about 28% of the world's meat, and the biggest meat consumed in China is also pork. So how do you see, the alt space developing, Asia being one of the bigger consumers?
Look, to be very honest, today, technology leadership is in United States, followed by countries like Israel today. However, you and I know that the biggest market is Asia, right? Between just China and India, it's a massive market. So ultimately, the technology which is there will all come into Asia. We'll see a lot of plants coming here. But Asia also is working on it. Countries like China and India and Singapore, we're also working on local technology for local processing of alternative meat products. Novel ingredients will come out of Asia. Oat is common in Europe and US, but here oat is not that common. Millet is more common. And therefore, you will see products lines that are going to come out, it should be different. They eat red meat, whereas we eat a lot of seafood here. So what you'll see in due course of time is a lot of these all-protein seafood companies in China and Asia who will actually start doing extremely well. This Chinese chicken looks pretty good.
Chicken rice?
And that's huera.
And we have Assam
So this is-
fish.
Yeah, that's from Omni Meat. In your house, are you the only decision maker when it comes to picking out whether it's all protein or mainstream meat or fish?
Yes, I do the weekly grocery shopping.
So for all protein to succeed, what are those 1 or 2 or 3 ingredients that will make or break a company?
As a consumer, it's taste, right? It's also pricing. I don't mind paying a premium, but how much of a premium?
Right.
If you tell me 4 sausages, plant-based, will cost me $15.
Right.
I can buy 2 whole chickens with that in the supermarket. You see price parity with, like, say, 1 pound of chicken versus 1 pound of Hura.
You used to do just food engineering before. Now we are using a whole different technology here. The capacity of these factories is going to determine the price. You have to have massive bioreactors. It'll take 5 to 10 years to crack that technology.
Wow, so
But
we're
then-
that far away.
By 2030, I think all of this will catch up. The taste, the texture, the price, the volumes,
Right.
the supply. If one thing is fixed, something else will break in these next 7 to 8 years. All startups go through this.
So it's no different from any startup in the
No
world.
different from any startup. After that is pure scaling. And of course, there'll be new versions, iterations keep coming out, so it'll be beyond 11.0. That will keep happening. Will you get better pricing, better availability? I think so. Just like in all food ingredients and food products today, right, how easily you get it in all grocery chains everywhere. This will be no different from that.
Besides taste and price, broader concerns about health and the environment are driving more to adopt a plant-based diet, while occasionally allowing meat and other animal products. Euromonitor found these flexitarians make up 42% of consumers globally, with millennials and Gen Zs leading the way. It's nascent days, we have a lot more innovations coming up. If you're going to put your money on something, is there a particular technology
Yes,
you're
and
most
so-
excited about?
So Sharon, I think one of the important ingredient in this is the technical team. The people's ability to take that technology and scale it and make the economics work. Now, why did Silicon Valley become Silicon Valley? Is because they allowed technical skills to come into the United States. It is an open society. You'll see people from all over the world coming to create innovative, disruptive products. During these last 2 years of COVID, we see less and less technical talent being allowed to come here. And I hope it's just temporary, because if you really want this place as an entrepreneurial hub to succeed, not just Old Protein, but all the other technology companies, we need to really open it up and allow more people with these technical skills to come here and work here. If we don't allow that, then innovation will not happen.
Hi, so for this dish, this the K-dog.
K-dog.
Yeah, so we are using 2 products of this, Moving Mountain hot dog and unlimited meat. And this is our Planet Army stew. There is Omi Luncheon and the Beyond Burger Patty inside.
Wow.
A big feast that we're having. Talk about your VC life. I mean, you've been doing it since 2013. What keeps you going?
There is a very famous local VC who told me that there are 3 types of VC funds. One is a pocket fund. All I care about is making money. So there are some which are ego fund, which are just constantly focused on bragging rights. And the third is a purpose fund, that they're looking for some purpose and some impact. By and large, everybody fits into these 3 or a combination thereof. Where I'm at today now with All Protein, why that excites me is that It's a combination of purpose and pocket. Nobody knew what alt protein is. Nobody knew whether this was going to succeed. But we put our own money into this. And we have family and friends who came together. And we ventured out to say, okay, it's a pioneering effort. But that can't be the reason why we exist. Why we exist is because there is an impact. Every company we invest in is trying to replace factory farming and meat and slaughtering of animals. So anybody who consumes these alt protein products is creating impact.
So I'm just curious, right? What will you tell your investors? What's the return profile for them? Because it's about purpose, it's about impact.
And
do they have
also
to
returns.
sacrifice returns for this?
But no, I mean, the economic returns is solid. A lot of it is based on time, right? So the IRR depends on time.
I mean,
so,
I call it like 7 years, right?
Right, absolutely. So we are a 10-year fund, but at about year 5, 6, and 7 is when you start seeing exits. And my sense is that you will see as good a return from our fund as a normal mainstream tech fund.
That is quite amazing, right?
Yeah.
Because I think most people's idea or preconception of an impact-related fund is that you're sacrificing
Yes.
that bit of performance, right, for
Yes.
whatever target and purpose you're trying to hit.
We are making investments in technology companies that are going to produce alt protein products. And they're going to grow and scale and get funded and get into an IPO or a SPAC, or they're going to do an M&A sale.
Yes.
No different than a tech company. Tomorrow's world, 5 years, 10 years, 20 years from now, as the succession happens and the transition of wealth happens, millennials, they don't want to invest in a pure tech fund just for the heck of it. Millennials are looking for purpose. Climate, environment, energy, health tech, they're interested in those. And therefore, if ESG-related companies give you a better return and it is also doing good, why would anybody not want to invest in it, right?
Yes.
And that's really where we need to go towards.
With Asia home to 5 times more millennials than the United States and Europe combined, and 65% of the global middle class by 2030, this region is primed to become an important battleground for not just alt protein adoption, but the success of a financial model that aims to benefit business, planet, and animals. To hear more about how Jayesh caught the rise of venture capital in Southeast Asia and his thoughts on ESG in the VC space, tune into the Lunch with Masters of Finance podcast at channelnewsasia.com/listen.